Well, let's move to another corporate then. We have Tata Communications that's on our radar. We have Mr. Lakshminarayanan, the MD and CEO at Tata Communications, who joins us on the show. Hi, sir. Good morning. Thanks a lot for joining in. Well, in month of June, when you held your analyst meet, you deferred your ambition of doubling your data revenue to around 28,000 crores by FY28. That implies a CAGR of close to around 13%. Now, in quarter 1, the growth is around 6%. Do you think you get to double digits from next quarter onwards? And for the year, what kind of a number in terms of growth can you deliver? Double digit on the cards?
Yes. Hi, good morning. If you look at our data portfolio, the digital year-on-year has grown close to 17.4%, which is very good given the macro conditions that we are operating in. The data growth as well year-on-year has come in just shy of 10%. So we still believe that the macro conditions that is in effect. There are pricing pressures. The core connectivity particularly has undergone some churn on pricing and some specific SAARC countries related issues that we have had. But these are, we think, are the blips that we have to encounter on the way. But talking about the long-term ambition that we set out, we still very firmly believe that the upsides are very much there, given the areas of investment that we're doing in the digital fabric.
So data revenue growth will return to double digit in the coming quarter?
No, we don't give any guidance. The only markers for us are, since we referred to the Investor Day, we called out that our relevance to our customers are increasing, where we said that our 10 million customers in the last 4 years had doubled. Right? So, and our BFSI segment, where we focused, again, almost doubled in the revenues. So our relevance certainly is increasing. The order book this quarter is better than the previous quarter.
Yes.
Even last year, I had called out both in Q1 and Q2 fairly good order book. That came on the back of some lumpy deals. And Q1 again, we have done quite well in terms of order booking. So and the funnel addition is another good indicator. We have had very good funnel additions, both in India as well as in the international market. So I think we feel very, very good about the traction we're getting in the market, the relevance that we see of the portfolio that we have with our customers in their transition journey. These are the two more important factors to me. But the macro is something that we can't control, and therefore I won't be able to give you immediate forecasts on the quarter or the year ahead.
Right. But 28,000 by 2028, you're saying that's the ambition, and you don't think that'll get pushed?
That's very much intact.
Got it. Let's talk about the bright spot then. You mentioned, right, digital revenue, that's done well for you. 17% up, 17.4%. Now, you want the share of digital and data revenue to go to 65%. Couple of questions on this front. What's giving you that confidence? When do you get there? And, when you're talking about the 65% contribution, are you factoring in some inorganic growth?
No, all of this is
organic.
Yeah.
Okay.
Over the years, all the components of our fabric has significantly strengthened for us. Right. So I can talk about each of the fabric, but each of the fabric, whether it's network or the cloud and security or the interaction fabric and the IoT fabric, all of them we have significantly invested and strengthened. The cloud, network and security and the interaction has done very well in the last in this quarter and the last year. The IoT fabric is somewhat muted compared to the past, but all the fabrics, we have complete belief in that would do well. The second aspect of it is some of the new products that we are working on, and we again called out as some of the strategic bets in our Investor Day. So for example, the whole cloud, the security, where we bundle all the capabilities of CDN, the firewalls, the next generation firewalls, the API security, and all of that. That we believe will be a big uplift. AI Cloud, again, is a big investment. And AI Cloud, particularly combined with our interaction fabric, where we have Kalera AI, where we think that inferencing is going to become more and more important as we go into agentic AI. Our combined value proposition of our own AI cloud combined with the agentic AI on top that we provide us in the interaction fabric will be a great differentiator in the market. So these are some of the bets that we are investing in.
Yeah.
And we think that that will get us to the ambition that we have stated.
Sure. So just walk us through what some of these investments and these bets, what they will mean for the margin profile of the company, say for the full year, stepping into next year. Because while in the quarter gone by, your margins improved sequentially, and you were at about 19 odd percent. In the past, you were at higher margin levels. You were at 20% plus. So as these investments into AI, agentic AI, all of they continue, does it mean lower margins? I mean, as a trajectory?
Yeah. No, I think, again, in our ambition, we've stated that we will want to get the overall portfolios to be at least at 23%. Our range is 23 to 25. And there are two factors, here. One is in the core connectivity itself, there have been some pricing pressures, and the core connectivity has not grown as much as in the past. So our core connectivity, for the margins to do well, we said it should be in the mid-single digits or low to mid-single digits. That has not happened over the last 2 quarters for various reasons. And one of the primary reasons that we called out is issues in the SAARC countries, and that has muted the core connectivity growth. And that is one big contributor for the overall margin. The second is the overall digital portfolio is negative EBITDA at the moment, and each of the fabrics. So the next-gen connectivity does well. The cloud and security, there are early stages, so we think that will come back into contributing more positively. The interactive.
But by when, sir? So if you could give some time indication, you said your ambition is to get to 23% plus margin.
Right.
By when? And does it get worse before it gets better? I mean, can margins fall to sub 19 as well?
Yeah, the timelines, we again gave out is the medium term of 27, 28. Our first goal in the digital portfolio is to get to an EBITDA neutral position. So today they are all negative. So I don't want to give a specific timeline again, whether it will happen. It will take a few quarters to get there, but the trajectory is the right trajectory that we are moving in.
Got that. Mr. Lakshminarayanan, the other sort of question, of course, is every industry is in some way or the other getting more competition or technology disruption, et cetera, et cetera. Prashant here, sir. The news this morning, basically, which suggests that, and this is a story from CNBC, that companies like Meta, Google, et cetera, are laying out, basically subsea cables, tens of thousands of kilometers. I don't know if you've seen that story.
Yes.
That is, in a way, kind of sort of, directly in your line of business. How does it affect you, sir? Is it a bit of a threat?
No.
Competition? Go on.
I don't think it's a competition. It's, our customers who used to lease and buy from us are now investing in their own cable systems. And then this cycle is to be expected. So it is not a threat. We are also diversifying into other customers. So, these class of customers we call as the OTT customers who...
Mr. Lakshminarayanan, these class of customers, the OTT ones, right? I mean, not what you describe. I mean, I think you describe internally them internally, Meta, Google, et cetera, as OTT.
Yes.
And this would be how large as a share of your numbers, sir?
No, we don't split that out, Prashant. Both the hyperscalers, the OTTs, and enterprise form the bulk of the core connectivity.
Yeah. So if they are starting to build out their own networks,
yeah.
I mean, that is essentially problematic, isn't it?
It's not a new phenomenon. It has been happening. Google, AWS, Microsoft, all of them have invested in their own submarine cable systems. It's not a new phenomenon. That has been happening for a while. They also at the same time buy from us because they do need diverse parts. The cables get cut under the sea. That's also a phenomenon that is increasing, and that causes resilience issues for these customers. So they do, while they build, they also buy extensively from other parties. So it is not that one is replacing, and their data needs are only growing. It is not coming down. Right?
No, that's the reason why I'm asking, right? I mean, this is the fastest growing part of the business. I mean, not for you, I'm saying generally, if you look at industries, hyper growth in these segments. So, but you're saying that this has been happening, and it's not as if the pace of change is quickening. I mean, it's not if there's no, we're not at a moment where suddenly is going to look very different a year, 2 years down the line.
Not really. I think this phenomenon has been, and the other counterweight to that is the enterprises, especially with their AI. I think their data need and the data growth is going to go exponential. And that also we see. And that is why our focus is on data center to data center connectivity in the enterprise space. And that has been growing very well as well. So I think these movements have always been there. I don't think this is of any particular concern as such. And that is why globally, Prashant, the entire area, while it's been coming down in terms of growth, while data growth has been there, pricing pressure brings the overall revenue growth down. We have been doing fairly well in that segment with mid-single digit, and we think that we can keep up that growth for the next few years.
Mr. Lakshminarayanan, thank you very much, sir. I think your investors would be happy and relieved with you laying that out. Appreciate you joining us here on CNBC TV 18 as always. Good luck.